The World Economic Forum continues to outline the plans of the elite for the new global financial system. Today we explore the WEF's recent white paper on the global future of financial and monetary systems. So let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy, so please do consider subscribing. So this document highlights 7 key areas in how the world must transition towards its new monetary reset. The first area is a growing focus on partnerships, and the emphasis for this is very much directed towards more efficient delivery of stimulus payments, or UBI it would seem. To enable this, they recommend that the system should drive partnership across the private sector to build tools and services that best serve evolving customer needs. Obviously, public-private partnerships have been something the WEF has long championed, and this would suggest central banks globally will utilise the expertise of the private sector in building out their central bank digital currencies. As the paper goes on to state that now more than ever we must embrace a partnership model to leverage the best of our collective assets. Through partnership, especially across the financial and technology ecosystem, we can build payment and commerce infrastructure and services, while also creating interoperability between them to enable ubiquity and mass access. Ultimately, the ability to link the central bank, the banking sector, individual and business accounts under one suitable system seems key. And this must offer faster payments while bringing those who are not active participants within the banking system under the CBDC umbrella. Financial inclusion, as it's known. They go on to state that there should be a desire to foster collaboration between the public and private sectors to speed the pace of recovery. And this really relates to the desire of the government to offer liquidity to support small businesses in a time of need. My hope, though, is that it doesn't lead to what is suggested by this fascinating screen capture here, suggesting that the state may demand an equity holding in such enterprises. While the paper goes on to say that systems should democratise access to technology tools and services. And it's also worth considering here what the IMF have previously stated in this paper, saying that any ambitious reform of the SDR, the special drawing rights of the IMF, should also embrace the private use of this global currency. This could include using SDRs to denominate private or government bonds as a unit of account in commercial transactions, for example in commodity pricing. A virtual SDR could facilitate the SDR's use in private transactions, creating a global cryptocurrency that could circulate along with national or regional cryptocurrencies backed by central banks. They argue that this would certainly be preferable to existing crypto assets, all of which have experienced highly volatile prices, or to that of Facebook's Libra, which has faced monumental regulatory challenges and nearly universal opposition by governments. So a privately usable IMF currency circulating among CBDCs. It's an interesting notion for mass expansion of the fund's capabilities that we've discussed previously, that's for sure. The second element of the paper highlights the evolution of Fintech following the 2008 financial crisis. Now, this industry has grown rapidly amidst widespread distrust of the banking system, as well as because of the permanence of zero interest rate policies and the introduction of large data platforms and relatively light touch regulation. But the effects of the lockdown policies across the world have had a dramatic impact on the fintech sector. And this table highlights with both the short and long-term impacts being quite profound here. Yet ever keen to pick winners, our central planners state that the emergence of digital technology opens up new opportunities for many of the 1.7 billion adults that make up the unbanked population around the globe to gain access to vital financial services. Certainly, this sector could facilitate much wider financial inclusion within the developing world in particular, much as we've seen recently in El Salvador with the introduction of the Bitcoin wallets. Third, the desire of CBDCs to integrate with a global digital identity framework. Yes, you knew this was coming. It's absolutely inevitable. And of course, this will be linked with immunization status. This is why vaccine passports are the absolute gateway for this. And so the authors go on to state that the current systems of data and identity are disconnected and incoherent and opaque. What is required is a system that is interoperable, apolitical, distributed and explainable, and that grants individuals greater control over their information. Not so sure about that last part, but this statement really enables a grand movement towards the United Nations Sustainable Development Goals of providing a legal identity to all, including birth registration by 2030. And so, as the World Bank has cited, around 1 billion people lack proof of identity. Now, planners want this situation corrected ASAP to ensure centralised data, which will be accessible via a decentralised system of distributed controls and permissions, is enabled. Now, the fourth element highlights the desire to remove cash, it seems, and accelerate the digital payments trend. A trend which is, of course, being steered by our central planners. Now, of course, convenience wins every time, and they make it increasingly convenient for digital payments. The paper cites the following table, which identifies global cashless businesses before and after the start of the current crisis. The focus on cashless business is interesting and clearly fits with this notion of digitization and the need to prepare small and medium-sized businesses for what is now appearing to be a prerequisite for financial survival. One term that seems to reinforce this perspective is the notion of a digitization journey, where the following sentence states, as payments continue to evolve, we must continue to ensure that all are able to join the digitization journey, sharing common standards and approaches to widen access. This is very much sounding like one world government stuff to me. Nevertheless, an interesting example here is the so-called geo effect and the transformational impact that this has had in India. Launched in 2016, it promptly gave Indians unlimited 4G internet for free. So demand for geo SIM cards went crazy, while cheap smartphones became more widely available. In 2017, Jio stopped giving away free data and instead offered monthly contracts for around $3 for about 50 gigabytes of data. So between 2016 and 2017, Jio went from having 0 to 400 million customers, and monthly data consumption amounts to around 11 gigabytes per head currently. By 2025, it is expected to be around 975 million. Now, it's worth noting that the parent company of Jio, Reliance Industries, is inevitably a World Economic Forum partner. Clearly, the market is being steered once again. Fifth, the WEF is concerned over the extent of quantitative easing programs and the impact on asset prices globally. The authors cite that as policymakers could not afford a financial crisis on top of a health crisis, there seemed to be an almost implicit guarantee of support should asset prices fall. And while quantitative easing has come a long way and an increasing number of central banks are purchasing assets on an unprecedented scale, asset values have become distorted. Market-derived pricing signals of the underlying health of the economy are being diluted, and policymakers must focus on redesigning tools that are again fit for purpose. However, the WEF are keen to praise central bankers for arresting stock market declines, while confessing that this has led to distortions against market fundamentals and has choked off economic growth over the last dozen years. But the WEF also highlight how there is a need for a reappraisal of asset prices where central banks should provide backstop. I read this as continue to expand their powers. Moreover, the WEF is keenly aware of the dangers that the massive debt loads represent and how monetary officials must manage the yields on this debt very, very carefully. Failing to do so would have, of course, reflect the unravelling of the whole debt Ponzi scheme enabled by our central bankers. But the most fundamental point made in this chapter is really that the central bankers are out of ammo and that the new financial system must enable, as they state, a more structured approach on the fiscal front is required to improve the growth trajectory. And so there it seems our hybrid monetary and fiscal framework via CBDCs amidst a world of ever-inflating stocks and financial repression is one we're set to see. Sixth, the WEF suggests a transformation of regulatory capabilities and approaches. Effectively, they're calling upon greater global governance, as they state, enhanced control and supervision of the financial ecosystem are only possible with the support of innovative solutions and regulatory cooperation from bodies across the world. Inevitably, this will be accompanied by additional regulation towards cryptocurrencies as well, just as we've seen recently with Binance being attacked in the UK. Seventh is a chapter on implications for the financial services workforce, which ultimately focuses on cybersecurity for institutions, their workers and customers. A seemingly sensible approach towards digital readiness within the financial system. Will cybersecurity simply translate to increased oversight and further loss of privacy? Quite possibly so. And what about the forthcoming cyber polygon event? While this is concerning, I can't imagine Vladimir Putin tolerating such an act of war. As such, personally, I think these attacks are only likely to be small scale of the type that we've seen in recent times. That's my hope anyway. And so what does this moulding the new financial framework overall suggest to us? Well, I believe precious metals will remain increasingly important, as much as they would love them to be irrelevant. It's also highly likely that Ripple's XRP has a role to play with the WEF as a key partner. Recently, the firm has opened a new Swiss office not far from either Davos or the home of the BIS in Basel, while they're also one of the WEF's partners, and their CEO, Brad Garlinghouse, donated to Biden's presidential campaign and is obviously keen, therefore, to build back better. Now, thanks so much for watching. Do let me know your thoughts, and please watch out for scammers using my image in the comments below. Seriously, so annoying that YouTube spends so little effort in terms of actually protecting content watchers and viewers and consumers on their platform, but spend plenty of resource time in terms of censoring content that's actually available. Anyway, thanks so much, and I look forward to seeing you next time. Bye bye.